Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Houlihan Lokey, Inc. quarterly report. Houlihan Lokey, Inc. offers a wide range of business and advisory services to its clients worldwide. The company's corporate finance segment provides general financial advisory services, including mergers and acquisitions, M&A transactions, debt and equity financings, and other corporate finance transactions. In addition to M&A and capital market services, Houlihan Lokey also offers financial restructuring and liability management services through its financial restructuring segment. This includes advising debtors, creditors, and other parties on recapitalization and deleveraging transactions, as well as providing advisory services such as structuring, negotiation, and confirmation of plans of reorganization. The company's financial and valuation advisory segment provides valuation services to companies, including fairness opinions, in connection with M&A and other transactions. This segment also offers solvency opinions, dispute resolution services, and expert testimony on corporate viability assessment and liability management transactions. Overall, Houlihan Lokey's business and advisory services include merger and acquisition, M&A transactions, capital market services, financial restructuring, and liability management valuation services, fairness opinions, solvency opinions, dispute resolution services, expert testimony on corporate viability assessment, and liability management transactions. The company serves a diverse range of clients, including corporations, financial sponsors, and government agencies. Houlihan Lokey, Inc.'s stock price has experienced a decline of over -9.17% in the past year due to its quarterly earnings reports and subsequent market reactions. The first notable drop occurred in late October to mid-November 2025, where the stock plunged 10.8% after the company's third quarter 2025 earnings report on October 31, 2025. Despite beating revenue and adjusted EPS estimates, investors may have been focused on future prospects, leading to sustained selling pressure. Another period of significant decline was observed around late January 2026, where the stock fell by 14.38% after the release of its third quarter fiscal year 2026 financial results. Although the company reported strong performance with a 13% year-over-year increase in total revenue and adjusted EPS surpassing forecasts, investor concerns regarding potential future revenue pressures in the financial restructuring segment contributed to the decline. The stock price drops can be attributed to market reactions to Houlihan Lokey's quarterly earnings reports, which highlighted potential future challenges despite overall positive results. The company's strong performance was overshadowed by investor concerns and expectations for higher growth rates, leading to a decrease in its stock value. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through a review of the key financial metrics presented. The increase in investment banking and advisory services revenue due to higher deal volumes was a significant contributor to revenue growth, as well as the growth in asset management revenue driven by increased assets under management. In addition, the completion fees, retainer fees, and progress fees from the corporate finance segment also played a crucial role in driving revenue growth. The recognition of $34,481 of revenues from deferred income balance and the increase in unbilled work in progress, net of allowance for credit losses, $74,913, further contributed to revenue growth. On the other hand, the decrease in receivables, -$46,450, had a negative impact on revenue growth. Employee compensation and benefits expense was identified as the primary driver of operating expenses. The corporate finance segment experienced a 12.5% increase for the 3 months ended December 31 and a 17.6% increase for the 9 months ended. The financial restructuring segment saw a 19.1% increase for the 3 months ended December 31 and a 10.3% increase for the 9 months ended. The United States segment experienced a 12.5% increase for the 3 months ended December 31, while the international segment saw a 13.5% increase for the same period. The completion fees, retainer fees, and progress fees were significant contributors to revenue growth in various segments. Overall, the key drivers of revenue growth or decline can be attributed to changes in deal volumes, assets under management, completion fees, retainer fees, progress fees, and employee compensation expenses. The net income of a company has experienced significant growth over the past year. For the 3 months ended in 2024 and 2025, the net income increased by 17% from $95,302 to $116,548. Similarly, for the 9 months ended in 2024 and 2025, the net income saw an increase of 17.3% from $277,791 to $325,862. The profit margins have also undergone a notable change. The operating income margin has shown a slight improvement, increasing from 22.4% to 23.1% for the 3 months ended in 2024 and 2025. However, it decreased from 20.3% to 16.4% for the 9 months ended in the same period. On the other hand, the net income margin has seen a more substantial increase. For the 3 months ended in 2024 and 2025, it rose from 15% to 18.4%. Similarly, for the 9 months ended in the same period, it increased from 16.1% to 18.9%. The reasons behind these changes are not explicitly stated, but they may be attributed to various factors such as improved operational efficiency, increased revenue, or strategic decisions made by the company's management. The company's financial performance indicates a positive trend in its ability to generate operating cash flow. According to the data on page 5 and page 26, the net cash provided by operating activities for the 9 months ended December 31, 2025 was $411,098,000, which is a significant amount. This figure is also higher than the previous year's net cash provided by operating activities of $490,225,000 in 2024. The positive operating cash flow suggests that the company has sufficient liquidity to meet its financial obligations and invest in its business operations. The company's debt level has remained relatively stable over the past year, despite a slight decrease in total liabilities from $1,644,831 to $1,642,988. This change is negligible. Furthermore, the principal outstanding under the HLI line of credit was 0 as of December 31, 2025. In terms of interest expenses, there has been an increase over the past year. The company's net interest expense rose by 32% from $19,569 to $25,880 for the 9 months ended December 31, 2024 and 2025. This significant increase suggests that the company is paying more in interest expenses than before. The performance of various segments and regions within the company has been analyzed based on extracted summaries. The corporate finance segment stood out as a top performer, with completion fees showing significant growth and revenue reaching $1,024,672 by December 31, 2025. This segment also saw a 12% year-over-year increase in revenues and a 15% YoY rise in segment profit. The financial and valuation advisory segment also demonstrated strong performance, with completion, retainer, and progress fees all performing well. Revenue for this segment reached $105,317 by December 31, 2025, representing a 10% YoY increase in revenues and an 8% YoY rise in segment profit. On the other hand, certain segments and regions struggled to meet expectations. The financial restructuring segment saw retainer and progress fees underperform, with revenue reaching only $162,815 by December 31, 2025. Additionally, the Asia-Pacific region experienced a decline in revenue, falling short of the previous year's total. The restructuring financial and valuation advisory segment also faced challenges, with segment profit declining by 4% YoY. It is worth noting that certain areas, such as hourly rates for financial professionals providing dispute resolution services and the Europe region, lacked specific information to provide a clear assessment of their performance. Management is downplaying the significance of interim results, stating that they do not accurately reflect the company's full-year performance. Instead, they are focusing on growth strategies and anticipated trends in their business, which come with associated risks and uncertainties. The majority of the company's revenues are generated from completion fees for corporate finance and financial restructuring. as well as retainer fees, progress fees, and slash or completion fees for financial and valuation advisory. Despite this, management asserts that there has been no material change in the company's outlook or strategy. This suggests a cautious approach to growth, with a focus on maintaining stability while exploring new opportunities. The company has a history of rewarding its shareholders through various means. One way it has done this is by paying dividends to its investors. According to the financial records, the company paid out $134,880,000 in 2025 and $126,700,000 in 2024. This demonstrates a commitment to sharing profits with those who have invested in the company. In addition to paying dividends, the company has also taken steps to reduce its outstanding share count through share buybacks. Although not explicitly stated as a primary objective, the net outflow in financing activities mentioned on page 26 suggests that buying back shares was indeed one of the company's financial strategies. This move is likely aimed at increasing earnings per share and boosting investor confidence. That concludes the financial summary for Houlihan Lokey, Inc. Feel free to comment below, and I will be happy to answer them when possible.